and welcome to Vox Markets. I'm John Hughman and I'm pleased to be joined today by Craig Martin of Dynam Capital, manager of Vietnam Holdings Investment Trust, to talk about its latest monthly update. Welcome, Craig.
Good morning, John. Thanks.
It's been a very difficult time for global markets. We're not seeing a lot of good news from many quarters, but it seems like Vietnam is proving one of the exceptions, and your update was obviously a reflection of that. It looks like the open for business policies that its government are pursuing are taking effect. Can you talk us through some of the month's highlights?
Yeah, look, it's very interesting. Vietnam doesn't escape from what happens in the world, but it's worth looking because it's a very distinct journey that it's on. As it seeks to become, modern industrialized country and a key part of the global supply chain. And it's very much an international player. So the Prime Minister was in the US in May, and he rang the closing bell of the New York Stock Exchange, kind of softly signaling Vietnam's open for business. We see the role of the capital markets in growing the economy and diversifying the source of financing for domestic infrastructure, all that kind of thing. So that's one dimension that they're open for business. I think he then went across the country to San Francisco and met with people like Tim Cook from Apple. And Apple manufactures a lot of stuff in Vietnam through 35 sub-assemblers. Apple itself isn't invested in Vietnam, but its sub-assemblers are. And the Prime Minister was talking, to Apple about how Vietnam's coming out through the recovery of COVID and is in a strong position. And Apple get that. And just shortly after, they announced that they're going to do more in Vietnam, producing iPads and going to take some production out of China, move it to Vietnam, because Vietnam has demonstrated over 3 or 4 decades that it's a great location to manufacture stuff. And during that period, this open for business has meant that Vietnam signed up to a multitude of bilateral and multilateral trade agreements. So there are advantages to manufacture in Vietnam, as well as you've got a labor force that's keen, hungry, and large. And you've got the business-to-business linkages that can support you if you're an assembler of iPads, Samsung phones, or even electric vehicles. So Vietnam very much open for business. Intel, I think Prime Minister Chin met with Intel as well. And in Vietnam, they don't fabricate semiconductors. That's something you would do elsewhere, but they have a very large assembly and test business. And the Vietnamese are very good at turning their hand to small-scale, intricate manufacturing, and when they get into their swing, they're hard to compete against. So, Vietnam very much open for business. The local domestic macro story is strong, but we've got clearly, very strong negative global headwinds. Mm-hmm. So, we have to keep an eye on that and find sectors that are less exposed to that if possible.
Yeah, absolutely. You mentioned Apple. There have been other electronics companies working in Vietnam for some time, as you mentioned in the update. But this felt really significant. It felt like it's a potential catalyst, with a halo effect that could really accelerate the process of attracting high tech customers to high tech manufacturers, high tech product producers to Vietnam. This is the beginning of the journey, it seems.
It's the beginning of the journey, John. You're absolutely right. What I think is the end goal is to create these kind of industrial clusters. So it's not a new idea. It was a Michael Porter idea back, I think, in the 60s. You create these industrial clusters of activity. Thailand took it in the 70s and 80s, became a massive global supplier of one-ton pickup trucks. It also became a big supplier of the components for the hard disk drive industry. Do you remember when we used to have hard disk drives before the cloud? Singapore also took a similar approach to this. It became a big center for the printer industry. Hewlett-Packard, I think, counted for a few percent of Singapore's GDP in the 80s. They made printers and then all the associated steps to that. And then the semiconductor industry in Singapore, all the fabs and everything, wafer fabs and all the supplies. You create the cluster, you have the subcomponent assemblers. So Vietnam's starting that journey too, with industrial parks, the higher tech move. And interestingly, there's just a report recently that actually Vietnam might become a center for producing pickup trucks, but not gasoline-fired or petrol-fired ones, EV pickup trucks. So, as the world modernizes, I think Vietnam's got a lot of strength to play from. And this clustering, as you say, a catalyst of players like Apple or Foxconn, which is one of its big assemblers, and also Samsung. The Koreans, South Koreans have been very active in Vietnam for many, many years, making everything from TVs to tablets and phones and all the gadgets. So I think there's a great opportunity to be had there. And Vietnam's well positioned in ASEAN for serving the Southeast Asian region, as well as serving China and the world, frankly. So it's a good place to be for manufacturing.
Yeah, absolutely. But you also mentioned in the statement, we're seeing more and more sort of domestic brands, domestic companies, enjoying similar success to their Western counterparts and sort of more developed Asian counterparts. Again, is this something that's being accelerated by the entry of Western customers into Vietnam? What sort of brands are we talking about? What sort of sectors?
Well, it's super interesting. I've been tracking this for 30 odd years in Vietnam, how consumer brands have developed. And it used to be, to have a successful consumer brand in Vietnam, it needed to be made in England when we used to make stuff, or in France or in the US. That made it a good brand. It was foreign, it was imported. And then perhaps, late 90s, early 2000s, you started to see brands were good. They could be foreign brands, but they could be made in Vietnam. So the factory quality was better and people would still believe the TV ads and the radio ads and what have you. But they were foreign brands. Now you're seeing the emergence of domestic brands, from foodstuff to e-commerce providers, digital brands that are domestic. They've got the kind of domestic look and feel. They've got some Vietnamese kind of cultural attachments, and they're positioned right for the market. So it's a changing consumer. It's a wealthier consumer. Per capita GDP's trebled over the last 20 years, $1,000 per capita. In 2003, it's 3,300 in 22. So consumers a bit more discerning, got more choice. They've got a lot more information in the smartphone. Vietnam has 100 million people, 70 odd million smartphones. So people are using that to make themselves aware and also informed. And of course, today, buying, transacting through that. So it's a very fast-paced consumer market. And we're seeing the retail recovery post-COVID in Vietnam is strong. And a couple of names that we have in our portfolio have done very well from this. One's a jewelry chain, and one's a mobile phone and a consumer goods and a grocery chain. And they've seen the retail and the interest again in brands emerging. So it's exciting. The shops are busy, people are active, people are getting on, and people are fighting for mind space of the consumer.
Yeah, absolutely. And I mean, you mentioned GDP per capita there at 3,000. That, again, it sounds like there's a lot of headroom for growth there. As the economy develops, then people are going to get richer, and this is just a growth story waiting to happen.
It's a growth story waiting to happen, exactly. And the playbook, if for want of a better word, you could look at China. When China got to $3,000 per capita, it doubled again within about 5 years. Thailand, when it got to that level, kind of doubled in 7 years. So, it's an inflection point. And you can see, Vietnam really growing and developing. People getting wealthier, small family size, kind of focused on being successful. So they do want to consume, but they want to save, they want to invest as well. And with that level of disposable income, they can travel. Now they can travel. They couldn't during COVID. So domestic tourism, international tourism outside of, Vietnamese traveling outside as well. So yeah, it's a starting point. There's a lot of runway. Let's put it that way.
Yeah, absolutely. The other thing you mentioned in the statement is, I mean, we've talked about the company being open for business, the country being open for business, and something to really attract foreign inflows. And you mentioned that there's been a recovery in that as well, which perhaps we could mention. But you also mentioned the government's commitment to improving to supporting what it calls a sustainable, law-abiding development. And so presumably there is also some work to do in terms of the business environment and actually improving the quality of the business environment.
Yeah, absolutely. Governance has come a long way, and it's actually something as an investor we push for. We advocate for better corporate governance, investor transparency, reporting, and a lot of companies now do listen. 10 years ago they probably didn't, but over the last 5 years, my business partner on the ground, Tin, has been really pushing that. He trains directors, he lectures on corporate governance. As a country, also the government are taking action, and that note was alluding to, in April and May, quite a few arrests of bad actors, bad apples, people that have gone off the rails in positions of power. Now, it could be corrupt officials. They found a few and they've fired those from the Communist Party. They fired the head of the stock exchange for failure to supervise, which I think in the UK would get you a promotion. They've also taken action against people who've been a bit broken the law in some of their lending and other activities. So I think they're also cognizant that Vietnam, there's a lot more participation in the capital markets from retail investors. There's 300,000 a month new retail investors in Vietnam. About 5% of the population have stock accounts. And the government wants to encourage that. It doesn't want to provide a soft landing pad for that, but it doesn't want those retail investors to get cheated. It wants a strong growth in that capital market, which is why it's taken some action in the last few months against people for either corrupt practice or failure to oversight or misleading investors. So these retail investors, they're new, they're learning. We've been studying them now for a year. We have a proprietary research at Dynam Capital in what we call the rise of the retail investor. We've just finished our recent wave. We haven't compiled all the stats yet, but we've seen in the last few months, as the markets have been a bit more nervous, a little bit of a retreat. People have not got as much in the market as they had this time last year. In addition to stocks, they're probably putting some more money into gold and safer assets, whereas this time last year, they were putting that into crypto as well as the stock market. And we've seen kind of small, medium companies that last year were pushed to quite a heady valuation, retreat. Last year, the small mid caps were a premium to the blue chips. Now it's gone back to reverted to mean, and the blue chips are at a premium to the small mid cap. So the market's learning, the market's evolving, and the government wants to balance this. We're open for business, we're open for wealth creation, and Vietnam's a communist country, but it's capitalist thinking and it's allowing the economic system to work, but it's not at any cost. Yep. It's somewhat conservative society, and they do take action, and they will weed out the bad apples, and sometimes that's a big stick, but they want to create the growth. Go back to the very beginning, to see Vietnam emerge as that modern industrialized country, see the wealth of the people increase, and Vietnam's reputation as a key part of the global supply chain grow and become more relevant for international investors.
Absolutely. Well, it sounds like a sensible approach, a sensible combination of policy. I mean, you mentioned investor nervousness, retail investor nervousness, and obviously we're seeing similar outflows in Western markets, Western indices. But the other thing, that's I think is really creating a lot of nervousness in the West is inflation. Obviously, you mentioned in the statement that Vietnam is navigating this inflation crisis somewhat better than Western countries.
Look, it is. I mean, as perhaps in the West, the kind of inflation is not really demand-led inflation, it's more supply. Vietnam's fortunate that it's a big producer of food and fruit and vegetables, and so exports to the world. So it's not on the receiving end of higher priced food directly, but some of those inputs into that food chain do inflate a little bit. So it's seeing an increase, albeit at relatively manageable levels. And then also on the energy side, about half of Vietnam's energy is domestically sourced. It's from hydro, it's from wind and solar, and only half is through kind of coal. Vietnam's got a lot of coal, but does import coal as well. And oil and gas. Vietnam has oil and gas, but it's a net importer of processed oil and gas. So there's an element of that imported inflation, but it's not at the levels of some of the harder hit countries in Asia, Sri Lanka, Pakistan, for example. And we're talking about a level of inflation of maybe 4% by full year, whereas Europe, US, we're printing 10%. So it's a different space. And I think as you look also at Asia, we see many countries in Asia still providing smooth, kind of encouraging, softening environment to enable expansion. So we're seeing it in Japan that wants inflation. We're seeing it in other parts of Asia. Vietnam also, interest rates are low. There's incentives for expansion. The banks are seeing their credit growth around about 8% for the first 6 months of this year. Full-year target probably about 18%. So still in growth mode. It hasn't got the same kind of structural issues that Europe and the West have, but Of course, a global recession is not good for anyone. And so there will be some tailwinds that everyone needs to navigate in every market. But Vietnam's got a strong domestic economy, as well as a strong position in the export market. So the signs are good that, long-term, the macro is very intact. And, there's often a lag, but I think the capital markets will catch up onto the good news in Vietnam, and valuations are quite compelling at the moment. So that's maybe why we're seeing more foreign investors look at the equity markets when they haven't for quite some time.
Yeah, that's true. I mean, I guess the other thing they're looking at is returns, and the performance of the Vietnamese indices has been strong, certainly relative to some Western indices that have very much fallen into bear market compared to China, which has been selling off quite sharply. Can you talk us through what's going on the markets and how you're positioned?
Yeah, well, look, last year was a stellar year in Vietnam. So in the full calendar year of last year, our fund, Vietnam Holding, delivered about a 64% increase in net asset value, 30% above the index. This year to date, the index is down. It's down 25%. And our fund is down, but we're still outperforming the index. So year to date, end of May, we're about 7% better than the index year to date. So there is a retreat. There's been the domestic investors, these retail investors, have been changing their positions, perhaps taking some money out of the market. Some of them have faced margin calls and have been forced sellers during the year. Valuations are attractive though, 10 times price earnings. And you mentioned growth. So we're still looking at kind of 30% earnings per share growth. So you've still got a good trade-off between that growth at a relatively reasonable valuation. And if you have a long-term mindset of 3 to 5 years, the retail investors have probably an investor mindset of about 3 months. But for ourselves as an institutional investor, we're looking at 3-5 years. It's actually a very interesting time because we can be picking up some good stocks in some of our core themes at good valuations and building those positions out over time. So it won't be as stellar a year as last year. And I say we're down for year to date, but we're still outperforming. And the funds outperformed on a 1, 3, 5, 10-year basis. So you are able, in a country like Vietnam, being on the ground, picking good stocks, building a good portfolio, to actually generate outperformance.
And what is it that's helped you outperform? What is it that you're doing that helps you beat the index?
It's being nimble. So we've got a team, about 14 people, focused on research and generating good ideas in the market, tracking these companies, going with conviction, a fairly concentrated portfolio. So we've got about 64% of the portfolio in the top 10 names. So we've got to get it right. We've got to get it right more often than we do, which thankfully we do. And it's being able, by being nimble, right size for the market. We're a fund that's about, in dollars, about $150 million of net asset value. So we're able to navigate, pick good sectors, right size our choices, our bets on the market. And if we've got it wrong or we want to correct, we have the ability to do so. So, and we can act quickly. And we're close to what's happening in the market. So being on the ground, being active, and being nimble, and also kind of getting underneath the bonnets of these companies, doing good research, getting to know them well, sticking with them, generates outperformance.
Excellent. Well, it's good to hear that. It's nice to hear a good news story in the current gloomy world. So no, it's been lovely talking to you, Craig, and hopefully speak soon. Thank you.
Pleasure, John. Thank you so much.